Hello everybody, welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get going, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen okay. Just waiting on a few more responses. If you're hearing things okay, just type OK in the chat box if the screen's all right and the audio's up and running. All right, great. I've got enough responses. Looks like we're ready to go. Welcome, Natalie, everybody else. Thank you for joining. As we get going, as always, keep in mind, all investments have risk. No one trade is guaranteed to profit. Each and every trade you take has risk, but also has a good potential for profit. So we keep that in mind as well. The idea is to go about things in a way to hopefully more often reach the potential profits that you're after and manage the risk on those trades that do not. Some combination of stop losses, hedge positions, or using AvaProtect, which is a nice feature you'll find on our AvaTrade Go mobile app and our web trader platform. AvaProtect allows you to protect against losses for defined time periods for small premium costs. And that's available on gold, silver, and FX pairings. So as part of your risk management plan, you could check that out on our mobile app and web trader platform. Now, keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Real quick, what is fundamental analysis? Basically, it's looking at the news. It's what are the main headlines? What are the economic reports telling us, and trying to find in one way or another a sense of direction in terms of what do we think the market is doing? What's the sentiment? Is it positive? Is it negative? And once you get a good feel for the sentiment with regards to different instruments, then you get on the chart, look for your entry points, your exit points, try and find the opportunistic entry and exit points based on your understanding of the fundamental news first. And so we'll go through those steps today. We can look at regular economic announcements or events. Not a lot of those today, more so tomorrow. And we can also look at extraordinary economic events, which is more so what's been happening today. And so extraordinary economic events are things that are not typically scheduled. The headlines can hit at any time, but you can still account for them with your risk management, stop loss, hedge positions, pending orders to take advantage of opportunities that could arise that you don't even know will arise. Pending orders are good in that regard. Usually buy stops and sell stops, waiting for breakthroughs of price levels just in case big news hits. And so in combination, the regular economic events and your extraordinary economic events tend to cause the market to have a sustained direction many times. And so once you understand that sentiment, then makes it easier to decide which direction you want to trade and find entry points that make sense. And so as we go along, if you have any questions, you want to give any input, please do so at any time in the chat box. Now, what are the headlines today? We see US Senate passes bipartisan $1 trillion with a T dollar infrastructure bill. The Senate was the question mark because there's a very slim majority for either side in the Senate. And so it's not as easy to pass things for the Democrats through the Senate. And they did get it passed, it looks like, by this headline. And the House of Representatives, which is controlled by the Democrats in the US, with a decent majority, will likely push this bill through without any trouble. And so we're looking at more stimulus now in the US. $1 trillion in stimulus certainly is causing some excitement on the markets. We'll take a look at instruments that maybe you could take advantage of that. You can imagine the likely scenarios. Major indices, well, they probably like $1 trillion in stimulus. Oil probably likes stimulus. And so we start to look at what are some opportunities. We know gold dipped recently. The precious metals took a hit as the US dollar strengthened with fears of the bond buying program in the US being scaled down. And so as some stimulus measures might be pulled back, the fears of inflation kind of wane and the dollar strengthens, and that pulls gold down. Okay, gold is a safe haven against inflation, and if there's not expectation of continued large inflation, then that's a stimulus to sell off on gold. However, we're looking at a headline that tells you why there might be a renewed interest in buying gold. $1 trillion in further stimulus passed in the US. So that if that doesn't potentially weaken a currency, I don't know what will. So this could stem to push the US dollar back down and drive interest back into gold. So we'll have an eye on that and we'll look for potential entry points. Wall Street inches higher ahead of $1 trillion infrastructure bill. We just talked about it. I'm just showing that doesn't matter which news network you're looking at, it's the major headline that's being talked about. We see volatility is up a little, but mostly flat. The US dollar is up healthily. It strengthened quite a bit. We may see a retreat of that with this infrastructure bill passing. It depends how serious these talks are about the Fed speculation here. And that's what this headline talks about. Dollar touches highest level in 4 months amid Fed speculation. They're talking about speculation of cutting back on the bond buying program that's been propping up the banks and the economy in the US. And so the government bond buying program could be scaled down. And if so, then that's putting fear eventually into the stock market and also into gold investors who may rush back into the US dollar. Okay, so it's something to keep an eye on. These are two opposite situations. Dollar strengthening because of Fed speculation to cut back on the bond buying program. They call it tapering. But then the opposite situation, 1 trillion in stimulus passing. So very interesting, two opposing headlines there. And so the market is a bit confused today. And then if we look at the regular economic announcements rather than the headlines that are not necessarily expected, what we see is tomorrow we'll have crude oil inventories. We're also going to see CPI numbers out of the US. If you're looking to see a big movement in gold when those CPI numbers come out tomorrow, if they show higher inflation than expected, if the consumer pricing index, instead of being 5.3, let's say comes in at 6.5 or something like that, you could see gold go rushing back up, retrace all of what it lost in the past day or two if inflation worries kick back in. Okay, if these numbers come in, consumer pricing index comes in and it shows lower inflation than expected, if the pricing index shows that the prices rose less than 5.3%, which is the expectation there. Let's say it comes in and shows prices only rose 3.5% or 3%, then you might see a further weakening of gold potentially as fears of inflation could even be drowned out further. Okay, so it'll be interesting to see how these numbers come in and what the reaction is in terms of gold and the US dollar and other instruments such as the major indices. Now, we also have some numbers coming in out of China tomorrow regarding loans and loan growth. Some may have an eye on that. Those are tentative announcements, not for sure on the timing of when those will come in. But China has been having some problems with the new variant of the COVID virus, and you know, there's some eyes on the Chinese economy for sure. Now, I mentioned the AvaTrade Go mobile app and the web trader platform, and that they have the AvaProtect risk management feature. And so AvaTrade Go can be found here, trading platforms, AvaTrade Go. By the way, you can also find AvaSocial here, which is a nice app that you can trade on your trading account with us, with automated trading signals. If you have a good trading record, you can even offer your trading as signals, etc., and actually turn it into a small business for yourself. So AvaSocial, it's a very cool app. You could check that out. AvaTrade Go is what I was referring to with the risk management features. And it's not just AvaProtect. AvaProtect, you see, is available in the order window on many instruments, but you also have features such as if you program your take profit and your stop loss prices, it'll tell you what your potential profit is. It'll tell you what your potential loss is before you ever buy or sell. It does those calculations for you based on your trade size and the distance to your stop loss and take profit. And so very useful risk management features built into the app, so you're fully informed as to what you're doing before you buy or sell. And the same is true if you log in here on our main website. You'll be in our web trader platform, and when you place your trades from here, you have those same features available to you. Okay, since we're talking today about fundamental analysis, I'll show you real quick a tool on our web trader platform that gives you fundamental analysis. If you click here and go to Trading Central, not only do you have free signals for cryptocurrencies, for FX pairings, when you go under analyst views and Forex featured ideas, the technical analysis is broken down for you, but also fundamental news through Market Buzz. And so these premium features are free. They're available on all accounts, all live accounts. You can see here which instruments are trending the most. Mostly these are stocks that we see listed here. We see Principal Financial Group. We see Morgan Stanley, JP Morgan. We have a lot of instruments that are trending with a lot of publications that have come out recently, articles about them that can help you out with the fundamental analysis. So if you click on one of these, it pulls up the most recent articles involving that particular stock, and then you can click on it and read the entire article. And they're timestamped. This came out 45 minutes ago, 52 minutes ago, 1 hour ago. Amazon shifts up to 8.2 billion pounds of UK revenues to Luxembourg. You can click on that, see what they're talking about, get a quick feel for how might you want to trade on that instrument with the fundamental work done for you to find those articles. So very cool features on the web trader platform to help you out both with risk management, technical analysis, and fundamental analysis. Now, let's take a look at the MT4 platform real quick. And there was a question that came in, what happened to gold? And I think I already kind of answered that with the talk about the strengthening US dollar and the fears that the US may taper their stimulus program, their bond buying program, which alleviates then a lot of the inflation fears and caused the US dollar to strengthen and gold to drop. Okay, that's what happened. I think it was a knee-jerk reaction, but it's there. Those fears of the tapering are there, and you see what will happen to gold if an official announcement is made that the US is cutting back on the bond buying program or cutting back on stimulus measures. If we take a look at oil, we'd say, well, why is oil up then? If the market was dropping today, well, there's $1 trillion in stimulus about to pass in the US. It's an infrastructure deal which will increase the demand for oil, for energy. Okay, so not all commodities think the same. Gold can drop while oil's going up. That's exactly what happened. You might refer to oil as black gold, but it's not the same instrument, that's for sure. And it doesn't respond to the same things. And so what we're looking at here is oil kind of capped itself today at a high right around 68, near 69. Okay, so when that infrastructure deal passes, and it looks like it's going to, you could see oil break to another high. Okay, so if we're looking at the technical analysis, when we're looking at 30-minute candles or 15-minute candles, we say, wow, oil's at a real high point. I wouldn't want to buy from here. It's up so high. Look, it climbed for so long. The whole screen looks like an uptrend. But if we get off the 15-minute candles and go to 1-day candles, we realize, well, oil dropped quite a bit. It was up at 76, 77, and now it's all the way down at 68. So it actually has a lot of room to climb in the bigger picture. So if I get rid of all these lines I've drawn over the weeks or days, and we take a look at a clean chart, we can say, okay, the high not that long ago was way up here. We've got a double wick support right down here around 65. Okay, support, support. With huge stimulus passing in the US soon, why should oil break 65? Why should it break below there? Fundamentally speaking, you might think it shouldn't. So a good fundamental move here based on the stimulus, 1 trillion in infrastructure stimulus about to pass in the US, likely anyways, no guarantees with politicians. Sometimes curveballs can be thrown, but let's assume we think that that's going to pass. And we say, okay, market execution, let me do, I don't know, 500 barrels. Okay, based on your account, your risk management, you take the trade size that makes sense for your balance and your risk management. In this example, I've done 500 barrels. If I put my stop loss about $3 down, right? So 68, 67, my stop loss is at 64, about $4 down. Okay, that's 2,000 risk approximately, about $4 to my stop loss on crude oil. And with a demo balance of 105,000, we're talking less than 2% risk on this move, and it's kind of a longer term move. And then we could put our take profit at the first major resistance, which is right here on 73. 73.6, and that gives me better potential profit than risk and the fundamental news on my side, right? And I don't even have to break this resistance level to get that profit. I'm putting the take profit just before this resistance level up here. And so if the stimulus passes, 1 trillion in infrastructure stimulus in the US, you could easily see oil retrace to where it was less than 2 weeks ago. It was up here at 73, 74, and not that long ago, it was at 76, 77, okay? So this is a fundamental trade that the technical analysis looks like it makes sense as well. We've got a nice support level here that held twice on the 1-day candles, and our stop loss just below it, risking less than our potential profit, okay? If anyone has any questions on that, you can chime in, or maybe you think differently. Maybe you think you should sell on crude oil because recently OPEC Plus increased production or said they were going to increase production. That's why oil dropped, by the way. That's largely why oil came down, was OPEC Plus deciding they were agreeing to increase production moving forward. And so oil price dropped, and then the fears about COVID pushed it down further. The headlines have kind of waned about those fears now. Not that they're not still there, but the focus now is on infrastructure stimulus out of the US, and boom, there goes oil bouncing up off the support level. Okay. And by the way, if you were trading purely technically, you'd have bought from down here around 65, because we saw the support here where it bounced. And then when it got near there, look how perfectly it went back up from that same price from 2 weeks earlier. That's a classic support level bounce. Also backed up by huge stimulus coming in the US. I don't know what's that making, almost 5 or 6 trillion in stimulus now the US has done. No wonder the US dollar has weakened so much. You keep printing trillions of dollars of a currency, it doesn't make any one of those currency as valuable. It certainly puts a weakening effect on the currency. Now we can take a look at gold, and we can say, okay, boy, yeah, it crashed. It came crashing down. But you know what? There's stimulus passing in the US of 1 trillion. Potentially, I guess I should say. It hasn't passed officially yet. It passed the Senate. It looks like it's going to easily breeze through the House. And so you might say, you know what? Let me take advantage of this huge dip in gold. Maybe I don't know. Maybe I do a quarter of a lot on gold and I buy on it. This is a fundamental move, number one, based on huge stimulus coming. Okay, there were fears about the Fed talking about tapering the bond buying program. That's partly why gold came crashing down. Okay, so that's built into the price now. Now we're looking at stimulus. That's more imminent, right? Another trillion US dollars being printed, and they're trying to pass something like a $3.5 trillion funding bill for the entire government. And so we easily could see inflation fears kick back in fundamentally. There's fundamental reasons for it. So your technical analysis is, well, I could put my stop loss below this wick. I don't have to get below the flash crash price here from the other night. I don't have to get below 1670, which is where it dipped down to. Maybe I just get below today's low. It tried to crash down right here. It hit 1717 or so and came back up. Now, likely stimulus is passing sometime soon in the US. And so if you put your stop loss just below this wick, maybe this wick, if you want to give it a little more distance, you could say, well, I'll go below that one. Depends how much you want to risk, what trade size you take. So there's a low point that tested and bounced. It tested again, bounced. Okay. And now we say, oh, all right, so where do I put my take profit? And I'm looking here. Right here makes sense to me. Why? Because this was the old support level. Look at this, support, support, support. Look how many points of contact of support here. Just on the screen, and there are more off the screen. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, at least a dozen times. This price level right here was a support level that held. It took huge news to break below that support level. Look at the classic breakthrough candle. And by the way, you could have just had a sell stop pending order right here. When it broke the support, you'd have been in. That's preparing for the unknown, right? Preparing for the unknown news. Putting a pending order below a support level on gold, just in case crazy news hits. You don't know what the news might be. If it breaks that support level, maybe it crashes. And boom, that's exactly what happened. It broke the support level that we could easily see here, was here for days and days and days. And once it broke, down it went with whatever big news caused it to break. That's what we talk about with preparing for that other type of fundamental news, the kind that can break at any time, the extraordinary fundamental news. And so this was a clear support level, a pending order below that to sell. Once it broke the support, you catch the momentum, down it goes. Okay. Anyways, we're looking that's a significant resistance level now. It's going to take really big news to get it back above that price. So if you're buying, it might make sense to take profit just before that price, which is what I've done here. That's what I set up, was a take profit just before this support level. This line is actually where the support level is, the solid red line. So the take profit is somewhere just below that. Okay, and if we look, it's still about 2-to-1 potential profit compared to risk. The potential profit is all the way up here, and the risk is down here. Better than 2-to-1 potential profit compared to risk. Okay, so this is what we see on the 4-hour candles. Gold certainly gave up huge ground and dropped. It looks like it could be poised for a pullback based on the idea that gold is a safe haven for inflation, and there's huge reason for inflation concerns again to kick in, with $1 trillion in stimulus likely passing, and maybe a multi-trillion-dollar budget bill passing in the US as well. So keep your eyes on gold. You don't have to think this way, by the way. If you think the USD is going to continue to strengthen and you want to go short on gold, by all means, you can short gold. Okay, the US dollar's been bullish and that's what pulled gold down. If you think that that's what will keep happening, then sell on gold. I'm not here to tell you what to trade, but the fundamental news right now seems that gold may try to pull back up. And technically speaking, this is a pretty good entry point if you're bullish on gold. Pretty good price compared to where it was 2 days ago. Matthew, that's a good question. Are we expecting the US dollar to fall? Sometimes you have to read into things what you think. Okay? I personally feel $1 trillion in stimulus passing and a multi-trillion-dollar budget bill on the table in the US could likely put some pressure on the USD to give up some ground that it gained in the past couple weeks. Okay? And yeah, Matthew, if you go to the 1 week candles, you see why gold stopped crashing right here. Okay? Gold stopped crashing on that flash crash, as they're calling it. It hit that price and bounced because on the 1 week candles, you've got a support level. On the current move that I simulated on the demo account here, I did not put the stop loss below the 1 week candles. I only put the stop loss below today's low. Okay, this wick here, for the sake of saying you're taking a shot with limited risk to go after a bigger profit. Now, if you're bullish on gold more in the long term and you're willing to expose a longer stop loss, then it does make sense to go to the 1 week candles and say, hey, I'll put my stop loss down here below the 1 week candles. Okay, now you've got about 1.5 times risk compared to one reward. You're risking more than the potential profit. But if you're being that patient with the stop loss, then probably you're putting your take profit. You're somebody who thinks gold should go back up to 1900 or more. So then your take profit's probably further away as well. I'm looking more at a shorter term move, take profit closer, and stop loss closer. Okay, more on the 4-hour candles, but that's up to each individual trader. And you certainly could be looking at those 1 week candles and going after a longer term move with a more patient stop loss. No, I don't have a gap because I'm looking at 4-hour candles. Probably if I jump to 1 minute candles, you'd see a gap, Natalie. Okay, it didn't gap over a 4-hour period. Maybe it gapped over a 1 minute period. And so if you go to 1 minute candles, you may see. Of course, there's no guarantee of reward when you have risk. Good question. No, there are no guarantees of profits ever. Now, if you're using the web trader or our AvaTrade Go app, you could place this gold trade with protection that guarantees that over 6 hours or 1 day or 2 days that you have no risk. Any losses are covered, and you could go after a large rebound on gold with up to 2 days protection where you have no risk of loss other than the premium cost for the protection. Okay, I'll show you how to do that. So if we want to go to the platform here, if I want to buy on gold here instead of on the MT4, if I'm bullish on gold because of all the stimulus coming in the US, and I say I want to buy, but I want protection for not 1 hour, not 3 hours, not 6. I want 2 days protection. I'll give it 2 days for gold to bounce back up. And I'm willing on, I don't know, 25 ounces. I'm willing on 25 ounces to pay $224. If it goes up $100 an ounce back up, right, or $50 an ounce back up, I make a heck of a lot more. I only need $10 in the right direction to cover my protection cost. So I can buy on gold with protection, 25 ounces, 50 ounces, whatever you want, and now I'm protected. Okay, I paid $216 for the protection. Okay, as long as I profit more than that over the next 2 days on gold, which the potential is huge for gold to go up more than $10, especially after that much drop, maybe I'm willing to have that measured risk for 2 days. Okay, I have to keep an eye on when that protection ends so that if the trade's still active when the protection ends, now I need to either put a stop loss or manually close the trade, whatever I decide to do. But now I'm risk free. I paid my small premium. My potential profit could be much, much larger. I could program my take profit at the same price that I did over here. I could put my program take profit at 1786. Up here, my potential profit would be much larger than what I paid for the premium. Okay? Okay, very good. Let's take a look then maybe at some other instruments. We see the US Tech 100 dropped off. The tech stocks in general help pull down the NASDAQ, the US Tech 100. And we'll see that the US 500 and the Dow Jones did not drop like that. They are not tech heavy in terms of the companies in it. And so we see the NASDAQ did not fare as well, and the others have climbed. Now, I would suspect that this climb could be accelerated if that stimulus passes in the US. Okay, this is a major uptrend on these indices, and perhaps you see a better entry point with the NASDAQ. Okay, now, infrastructure stimulus doesn't necessarily help tech stocks. It would help the companies in the Dow Industrials and the US 500 maybe more. So you see a different response. And maybe we look to other countries as well. We could look at the DAX 30, the CAC 40, to get an idea of maybe there's an opportunistic entry point somewhere here. So if we look at the 5-minute candles, we see a pullback on the DAX. Likely the DAX will go up with a US stimulus package being passed as well. And look, the entry point is nicer. It's pulled down to a support level. So maybe I'm looking at the DAX and I'm saying it's such a global marketplace. If the US passes $1 trillion in stimulus, that's not just good for the US economy, that's good for the global economy. They say as the US economy goes, so goes the world many times. If the US economy catches a cold, the whole world sneezes, all of these phrases. So maybe I take a look at the DAX and I say, if there's a lot of positive momentum coming out of the US, perhaps that carries over to the European market. That's the fundamental thinking behind this simulated move. And so then I put my stop loss below the support. I don't need to risk much to get below the support level here. And I put my take profit at today's high up here, just before. Okay, this is a scalp move. I'm on 5-minute candles. Okay, this isn't a big patient move. This is a scalp move. This is maybe the momentum will carry it up now. The US indices are climbing. Usually when the US indices go up, so do the European, so do the Asian, etc. Could be tonight. Someone's asking, when is the stimulus expected to be passed? It passed the Senate today. It could be passed tonight. Could be announced tonight. Could be tomorrow. But the anticipation is it will pass. So we'll see. Crazier things have happened though. When politicians start trying to all agree on something, sometimes it doesn't happen. But you can take into account that the expectation is that it will pass. And so you trade with expectation many times. So here's the support level in the 5-minute candles. Here's my take profit, just a little scalp move that perhaps we can catch a bit of momentum that could follow the US 500, which already jumped up. Okay, it already climbed. Or the US 30, which also already climbed. So we're looking for an advantage here. You could buy on this. It just broke the high of the day. That establishes an uptrend. So you could buy from the high point. I maybe prefer looking for something that might follow it that hasn't gone to a high point yet, which I'm looking at the DAX. Okay, We also could look at the FTSE. It's already up. It's at the high point. We can look at the Nikkei. It's up at the high point. The India 50 trying to climb. It's also climbed to somewhat of a high point. You get the idea. You can start to look for where do you have an advantageous entry point on some of these instruments. We can start to look at platinum and palladium along with gold. We see palladium on the 5-minute candles is up, 1-hour candles up, platinum up. So you can see why maybe we're thinking gold might go up, right? So perhaps gold has some leading indicators with other precious metals rising as a reason maybe for gold to go up. Not all precious metals are the same, though. Some are used in industry and different uses more than others. Now, if we look at some of the cryptocurrencies, Bitcoin, interesting day today. Cryptocurrencies have been on a tear of late, climbing quite a bit. If we go to 1-day candles, you see the run up, starting back here, up, 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 up for about a dozen days in a row, a little pullback for a week, and then up, 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 up for a series of days in a row again. Now we've reached a resistance level up here for Bitcoin. You see an old support level on the 1-day candles. Support, 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 breakthrough becomes resistance. Okay, that was predictable price level here that Bitcoin hit and pulled back. So you could be looking for a price if you think this bullishness will continue. You could be looking for a price you like as a support level. I see some prices down here that look like support, like right here in particular. This was old resistance. We see when it broke through, it became support, support. So perhaps this downtrend takes you to this support level. This could be an interesting place to try and buy from with a short stop loss and a much longer take profit. Okay. If you're looking to make a market move, maybe it's a hard spot to do that from. We're in the middle of a short downtrend here on the 4-hour candles, the 1-hour candles in particular. You see it just broke this little support level. So it looks like could be on its way down to the next support level. And if you're bullish on the cryptocurrencies because of the recent run up, this support level could be nice down here. Looks like an interesting spot. And you could look at Ethereum as well. Some of the other cryptocurrencies, they're also looking similar to what just happened here with Bitcoin. If I can find my other cryptocurrencies, they're hiding on me. Here they are. Okay, so Ethereum. And we see the same pullback on the 1-hour candles. We see a similar support level here that it did not break. Bitcoin already broke the 1-hour candle support level, and we were looking at the lower support level as a potential entry point, which was down here. Okay, so it's a similar setup to Bitcoin, except Ethereum didn't break the 1-hour candle support. You see that here. Okay, and so if you're bullish on Ethereum, they just did some major upgrades. Fundamentally speaking, they did some upgrades to their blockchain, which is going to allow better scalability, a larger amount of traffic without driving up their transaction fees, etc. And so and they actually built in a feature to burn Ethereum as people pay transaction fees on their blockchain for transactions. They're burning those Ethereum, which in theory should lower or limit the increase in the supply of Ethereum and drive the price up easier. So there were some fundamental reasons why Ethereum might run up. So if you like that idea and you're buying on Ethereum, whatever trade size would make sense for you, for your balance. Maybe for a scalp, you just put your stop loss below here and your take profit at today's high. Just before this resistance level, my potential profit is a bit nicer than my risk. If you're wanting to be more patient, it looks like Bitcoin could be your move because it already broke the support level to put a pending order. That would be a buy limit, by the way, a buy limit. This support level is down around 42,960. So a buy limit from 42 960 lends you some patience before getting in. Your stop loss could be just below that 42,400. And your take profit could be back up near this high. I'd say 46,000 or just before 45,900. Okay, so pending order. If this continues to drop, it triggers the buy position from just above the support level. Your stop loss, maybe I'll stretch it down just a little bit further, is below that support level. It would have to break the support to hit your stop loss, and your take profit is about, I don't know, 4 times the or 5 times the potential profit compared to what you're risking here if it bounces back up to where it was earlier today. Okay, so a variety of moves, a variety of instruments, some pending, some market moves. So this is the idea of diversifying trading, using fundamental news to back up your trades, and also looking for technical analysis that makes sense to you. Now, you don't have to agree with the moves I made exactly today, but the concept behind it, understanding the fundamental news, taking that into account, then applying that to the technical analysis and making trades that make sense for your belief about the fundamental news and looking for advantageous entry and exit points with your technical analysis in the direction that you believe, not that I believe, but that you believe the fundamental news will move these. Okay? All right, everybody. Any last questions? I think this is a good spot to stop. We've been going for over 40 minutes. Ben, you asked a question, but I see it says you've left already. So I don't know if your connection went out or something, but if I see you pop back in, I'll address your question. Any other questions? All right, everybody. Thank you very much for joining. You have a good evening too. Thank you for the good wishes. And good luck with your trading as you move forward. Keep an eye on the news because I believe we may see some big news, if not today, then tomorrow, regarding stimulus out of the US. Yeah, I'm sure the Delta concerns will pop back into place, Matthew. They were out of the headlines today, but I'm sure they'll come roaring back eventually. All right, everyone. Thank you for joining. Bye for now.